Misreading this crypto flushout could be your single costliest mistake this year. While almost everyone is panic selling what looks like a total market collapse, the pros are seeing one key signal that suggests this is all a carefully laid trap. Stick with me, and by the end of this, you're going to have the exact strategy the pros are using to turn all this fear into a massive trading opportunity. Okay, so let's break down what's really going on. On one side, you have the retail panic. Total fear, right? But on the other side, the professional analysis is telling a completely different story. And the single most important piece of that story is low volume. See, a real market crash, a true stampede for the exits, has gigantic selling volume behind it. This sell-off, it doesn't. This looks less like a panic and a whole lot more like a calculated hunt for liquidity. So, we're going to break down the complete crypto flush-out strategy. We're going to turn this insight into a clear, step-by-step plan that you can actually use. Here's how we'll do it. First, we'll get a handle on the chaos. Then we'll dive into why this is very likely a trap. After that, we'll get into the core strategy using Fibonacci. I'll show you prime trade setups on the biggest assets. We'll cover which coins you should probably avoid. And we'll finish up with a pro tip on how to trade smart. First up, let's get a really clear picture of what is actually happening in the market right this second. So here's the deal. We've had a massive dump, what some are calling a Cyber Monday special. Bitcoin's monthly candle closed red, which definitely looks bearish on the surface. But the main effect of this move, it was to wipe out all those leveraged long positions. Traders who borrowed money to bet on the price going up. Wiping them out is what creates this intense selling pressure. But that same pressure is pushing the market toward oversold territory, and that is exactly where the best opportunities are born. Okay, now for the most important part. Let's look at the evidence that this isn't a real sell-off at all. This quote right here really says it all. The volume behind this huge drop is weak. It lacks conviction. Think of it like this. If the big institutions, the whales, were truly panicked and selling everything they owned, we would see a roar of volume. This is more like a whisper. It feels manufactured, designed to trigger stop losses and shake regular people out of their positions before a big reversal. So let's just call it what it is. This is not a real crash. It's a liquidity hunt. The market is being pushed down on purpose to hit the sell orders of retail traders. Those orders create a big pool of coins, liquidity, that bigger players can then scoop up for cheap before they, you guessed it, potentially push the market right back up. Okay, so if we know it's a trap, how do we play it? Well, this brings us to our core technical strategy. We're going to use a tool called Fibonacci retracement. Now, if you're not familiar with it, don't worry. All you really need to know is that it's a way to map out predictable support levels, spots where a price correction is likely to hit the brakes and turn around. Just think of these levels as magnets for the price during a pullback like this one. And the strategy is actually pretty simple. First, we only focus on strong assets that are getting flushed out. Second, we zero in on two super critical Fibonacci levels, the 0.618 and the deeper 0.786. And finally, we execute our trades at these levels, but, and this is key, with very clear, predefined risk management. All right, now for the really fun part. Let's look at the exact setups on Bitcoin, Ethereum, and Solana as we speak. For Bitcoin, look at this. The price is sitting perfectly on that key 0.618 Fibonacci level, right around $85,000. The idea here is that these fast, low-volume dumps often lead to an equally fast snapback recovery. So the plan is to look for buys in this zone, with a very clear stop loss just below 83,000. If it breaks that level, our idea is wrong and we get out. Simple as that. Ethereum is showing a very, very similar picture. It's also holding strong at its own 0.618 fib level. The setup is basically identical. You look for a fast bounce from this support with a tight stop loss right below at around 2780. Now, Solana is a little different, and honestly, it's potentially a lot more rewarding. It's had a much deeper pullback, all the way to the 0.786 Fibonacci level, which is pretty common for more volatile alts. But what this gives us is a fantastic risk-to-reward setup. Our potential profit is way bigger than our potential loss. The entry is right around where we are now, with a tight stop near 125, and we'd be targeting a move back up toward the 135 to 140 zone. Okay, this is just as important as the buy list. A huge part of this strategy is trading strength, which means we have to actively ignore the weak coins. So for now, we're definitely avoiding assets like Zcash. It's just too volatile and hasn't found a clear floor. Cardano is also off the table. It's already lost its key support levels, which shows it's much weaker than leaders like Bitcoin and ETH. And Doge? Yeah, not touching that until it shows a major trend break. The key here is to focus our capital only on the absolute strongest setups. And finally, let's talk about a professional tip for managing your risk and, honestly, your psychology when the market gets this crazy. See, when you trade your own capital in a scary market, your stress is through the roof. It's so easy to make emotional mistakes. The professional approach, especially during times like these, can be to use a funded account. You're trading the firm's capital, not your own. This totally changes the game. It takes the emotional stress off the table and lets you be patient enough to wait for those A-plus setups we just talked about. And this right here is the secret sauce. Some of these funding programs now have no time limit on their challenges, which is an absolute game changer. It removes all the pressure to force bad trades. You can literally just sit back, relax, and wait for the market to hand you a perfect setup on a silver platter, which is exactly what this flushout might be. So that brings us to the final question, doesn't it? The market is clearly selling fear at a deep discount right now. The real question is, are you prepared with a strategy to buy the opportunity?
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.